Hello and welcome to this afternoon's session on today, the second day of the 30th Diggers and Dealers Mining Forum. It's a privilege to represent Canaccord Genuity as the session chair. This is Canaccord's fourth year being the main sponsors of Diggers and Dealers. I'm Paul Howard. I'm a mining analyst with Canaccord, and I thought, I'd highlight the benefits of having a balanced investment portfolio through some numbers, given I am an analyst. So look, of the 55 companies presenting at Diggers and Dealers this year, 54 are listed. And collectively, these 54 companies have averaged an 80% share price gain over the past 12 months, 80% average of all the companies at Diggers. Wonderful performance. But I'm delighted to share that the 12 companies presenting in this afternoon's session, some of the guys are here, they've benefited from the highest gain of all companies at Diggers, so an average of 109% share price gain from the 12 companies presenting in this afternoon's session. So that's the best session out of any Diggers and Dealers session today. So look, I've been asked to read out there's two good books for sale at the Pay Dirt booth inside. One's called Rocks in Their Hands. It takes in dangerous travels overseas by some Australian geos, many of whom you guys will know. I actually have this book and it's a cracking read, so you should have a look at this one. There's also another one called Australian's Nickel Adventure, which covers the history of the industry featuring the achievements of the legend Roy Woodall. So a couple of books at the Pay Dirt booth for you guys. So look, let's kick things off. First up, we've got Panoramic Resources, Victor Rajasuriya, Managing Director and CEO. Victor's a mining engineer with 25 years experience since graduating from the Curtin WA School of Mines. Before Panoramic, Victor was MD of Echo Resources and COO of Barminco prior to that. He was also MD of Breakaway Resources and has held senior positions with the likes of Newmont and Goldfields. And I'm also reliably informed, not sure if it's true, but Victor enjoys unicycle riding while in his spare time. So please welcome Victor to kick off this afternoon's session.
Thanks, Paul. That was actually an electric bike. When I connected with the fence, I went flying. I was only a unicyclist for a split second. Good afternoon, everyone. And listen, just before lunch, you heard from the Prince of Gold in Stu Tonkin. And now you get to listen to the King of Nickel. I will be by the end of this year, so that's the plan anyway. So the picture on the screen is one of the development drives that we are currently developing at our SAVANNAH mine. It contains nickel, copper, and cobalt. We are going to be the next nickel producer in Australia, and by end of this year, we will be sending our first shipment. So over the next 15 minutes, I'll take you through this exciting journey that we are on and share what we are all about. I'll skip through the usual disclaimers. I'll start with the corporate overview. We have about 2 billion shares on issue. At the moment, the share price is about 18 cents, giving us a market cap of $369 million. We've got cash in hand at the end of the year, at the financial year was $24 million and no debt drawn. In regards to the shareholders, our largest shareholder is Western Areas, and I'm sure Dan is presenting later today, and he'll probably start off with what a great investment they made in Panoramic last year. They own just under 20%. Zeta Resources own just under 17%, and they've been a very supportive shareholder of the company since 2013. Our third largest shareholder is actually Wyloo Metals, which is backed by Andrew Forrest, and they hold just under 5%. So that's pretty much the major shareholders we have. We have an experienced board. Nick Sonata is the chairman. Both Nick and I are mining engineers by background with operating experience. Gillian and Rebecca bring a spread of experience in finance, governance, contracts, and legal. And we have Peter Sullivan, who probably has about 100 years worth of experience as a director experience, lots of knowledge, and keeps me on the straight and narrow. And Grant Dyker joined us as a CFO in September last year. He's just warmed up over a year, and he's ready to start collecting or counting all the money that we are going to be making from the site. In regards to the site, the operation itself, to get to site, you go from Perth to Kununurra and then drive down past the Argyle mine, which is currently closed, and you get to our project. When we are shipping our concentrate at the end of the year, we'll be using the same infrastructure, but take it to the Wyndham port and then transport it overseas. The picture in the middle shows you our tenement package. The green bits are the ultramafics that are highly prospective for mineralization, and the Savannah complex is right in the middle of that tenement package, and that's where we've been concentrating. That's where we spent the time exploring to date. We are surrounded by IGO on all sides of our tenement package. The third picture gives you the layout of the mine. The old Savannah mine is the grayed out bits with some colored remnants yet to be mined. And the new mine that we are starting and mining is the Savannah North mine, which is all the colored bits to the right of Savannah. Over the last 12 months, we spent the time finishing the fresh air raise that's going to provide life of mine ventilation for that mine. And we also opened up some of the levels in Savannah North so that when we decided to restart, we had a good start possible. Just as a background, when Savannah ran for the first 12 years, it paid out about $114 million worth of dividends to our shareholders. And the Savannah North ore body was found from all the drilling for that deposit was found from Savannah itself. In April this year, we finalized a feasibility study. It's a very conservative model, and it gave us some good economics. We changed our strategy, and we said we'll go with the underground mining contractors and processing contractors to run the plant. And we picked tier 1 operators. So we picked Barminco to do the underground mining, and we picked up Primero to run the processing plant and maintain it when that's up and running. We also saw that the commodity prices were increasing. So in April this year, the board gave us the green light to start the project. The balance sheet, we wanted to make sure that was strong. Even though we have $24 million in cash, we said we'll go and get a debt facility. We got a debt facility with Trafigura for $45 million US. That hasn't been drawn yet. We'll probably do that in September. And in return, we also signed an offtake agreement with them, which has some really good terms. So coming back to the mine plan that we've come up with, it's a 12-year mine life. So it's a long, stable mine plan. It's going to produce about 9,000 tons of nickel per annum, about 5,000 tons of copper per annum, and about 700 tons of cobalt per annum. So a fair bit of volume from the mine. And in April, when we used the April commodity prices, the project was going to generate $610 million worth of cash flow and had an NPV of $353 million. So that was the pricing in April. The prices, as you know, have improved, and I'll speak about what the financials are in the coming slides. In regards to the infrastructure on slide, we have a 1 million ton per annum processing plant. We've maintained that over the last year. So when we restart, the processing plant will start in November this year, and there's minimal expenditure required to bring it in place. We've got all the environmental permits, the mining permits, the transporting permits to take the concentrate to Wyndham Port. And the power plant is a diesel power plant that's operated by a contractor. It's owned by them as well. So all the infrastructure is in place. And as I mentioned, mining has now started. So what happened was mining was originally going to start in August. Barminco were very good in organizing mobilization ahead of time, and they were able to find the people in the tight market ahead of time. So in July, we pushed the button to start the mine. It's a 4-year contract, and they're on to a good start. So we've had the first month, they've actually, with one jumbo, they've been able to get 400 meters with the jumbos. We've trucked about 14,000 tons of ore to the surface, and there's about blasted stock of 18,000 tons waiting to come out. And most importantly, they've already drilled about 80,000 tons of stope ore ready to be blasted over the next few months. So the plans are coming together quite nicely. Yesterday, we announced that we have signed a 3-year agreement with Primero. They're going to be operating and running the plant. We challenged them with getting WA-based employees. So they have to get about 64 employees. They took the challenge on, and to date, they've actually come up with 75% of the workforce from just WA. So they're actually doing really well with the leadership and the technical roles already filled. So even though mining is started now, our plan is to only start the processing plant in November, and that's so that we could build a good stockpile, and then we start the processing plant so that it's going to start and then keep humming as we ramp up. The initial milling rate, even though the plant can do 80,000 tons per month, we're going to start with 40,000 tons and ramp up over the next 9 months. So it's a conservative assumption is what this model is all about. A couple of other good examples is the mill recovery. So when the old Savannah mine ran over the 12 years, our mill recovery was 86%. But in this case, we are running with 83%. And same could be said about the mine grade and the dilution that we're using for this life of mine. The grade that we're using is 1.23%. The dilution that we've factored to bring the grade down to 1.23 is 22% dilution. And again, when the mine ran for the 12 years, the dilution was 12%, and I'm sure the Barminco guys will do much better than the 12%. So if you look at the graph below, you could see that FY22, the one that we are currently on, is it's ramping up, and hence the physical side about 600,000 tons for the year. But eventually we get to the 1 million tons at the start of the next financial year. So in April, we did the financials. We had, as I mentioned before, we were going to generate $610 million, and the NPV was $353 million. So right now, the revenue looks like it's going to be about $2.8 billion. The revenue has gone up by 20%, but it has a significant impact on our cash flow and our NPV. The cash flow goes up by 76%. The NPV goes up by 82%. So this little mine is going to generate about $1.1 billion in cash flow over the next 12 years, and gives us an NPV of nearly $650 million. Imagine the one little mine producing $1.1 billion for a junior company such as this. The other thing to note, and the takeaway from this graph, is the thick gray line. The mine is going to be producing about 9,000 tons of nickel per annum. But by the time you add the copper and the cobalt and convert them to nickel equivalent, we are actually going to be sitting at just under 15,000 tons of nickel equivalent per annum. I think Dave Southern mentioned earlier that they're going to be at about 16,000 tons of concentrate, if I heard him right. So it's a significant amount coming from this little mine. In regards to our timeline, every activity that we said, we have delivered on time or slightly ahead of time. The 3 key things for the next 6 months is going to be, we'll be drawing down, I think, about $30 million US from our drawdown facility on the 1st of September, the processing plant starting in November, and the shipment taking place in December. So quite an exciting position for us. And then from January onwards, we should be cash flow positive on a monthly basis. I'll switch to the exploration side. So the picture you see at the top is the Savannah North mine. The red bits are the reserves that we will be mining over the next 12 years, and the yellow bits are the resources that are yet to be converted. The table on the right shows you the reserve and resource conversions that we currently have. And the conversion is not the best. We've only converted about 55% of the resource into reserves. The reasons for this low number is all the drilling has taken place from Savannah and not Savannah North. So our plan is, as Barminco develops the underground further, we'll put some drill cuddies and we'll drill from Savannah North and open up the mine further. And there's a good chance that given these resources are right next to the existing mine, we'll be able to extend the mine life by about, it could be 20-year mine life at Savannah. And the picture at the bottom basically shows you the yellow box is where the Savannah North sits. So this is looking at from the surface. And you could see the green circles, which are other EM plates that we haven't even followed up. So there are definitely other targets that we will be we'll be targeting. Right now, exploration, we are starting an exploration program. A drill rig just arrived to site. Our plan is to start with T3, which is the eastern end of the Savannah North mine. And the plan is, if we end up with additional reserves, they will fall into the mine plan straight away. And more importantly, T1 and T2 are exciting targets. When SAVANNAH actually shut down in 2016, the metal price was low. We didn't actually finish the exploration properly. And each time in SAVANNAH's mine life, there was a fault that ran to the structure. It's called the 500 and the 900 fault, which is the red lines. Each time the ore body got displaced, and we had to find the ore body with more drilling. So we are now going to start that drilling program on the second half of 22 and find exactly what happened with SAVANNAH, and potentially that could also become another source to the plant. Now, comparing other nickel sulphide assets to ourselves, I think we are very undervalued. We do have a good resource, we do have a good reserve, we have a processing plant, and we are going to be generating concentrate by December, which is the next producer in WA. So I do think we are quite cheap, but feel free to make your own decisions on that. We are a small company, but we are certainly focused on sustainability. Our plan is to get the mine running properly and then look at various ways to reduce our carbon footprint. Our first target is the hydro plant that's at the Argyle mine, and try and extend the hydropower to our side. At the same time, the parallel studies that we are running is a solar farm and a wind turbine on site. So it's an exciting phase for us, because over time, let's say 3 to 4 years' time, it'll be great to have electric trucks running underground, less ventilation required then, and our productivities also should increase from the mine. We have been actively involved in the community. We've sponsored some local groups, but it's all about educating the local workforce and the communities and make them a better community. That's where our focus currently is. I believe I'm running out of time, so I'll circle back to the investment summary. We have invested about $120 million in our infrastructure. The plant alone is worth about $100 million. And we have a 12-year history of operating this asset. Underground mining is now started with a Tier 1 contractor in Barminco, who's delivered on the first month, and I'm sure they'll keep delivering. And Primero, who's going to be processing our concentrate, will help us get the concentrate and ship out by December. Our balance sheet is now strong. We have a good financing package and offtake agreement with Trafigura. And in April, our cost base was going to be $6.36 a pound and generate an NPV of $353 million, but now it's going to be $1.1 billion worth of cash flow and an NPV of $650 million. And the exploration potential is phenomenal. And most importantly, we have the people, the management, the skill set, the contractors to deliver on our promises. And as you remember from Professor Ian Golding's opening presentation, he talked about nickel, where he said the demand could be increasing 7 to 10 times over the next 10 years. So we're in a good space. It's all about critical metals. And next year, I'll give you a better story.
Thank you very much, Victor. I suppose the key takeaway, small mine to produce 1.1 billion in cash flow, that's pretty phenomenal. Just in the interest of time, I think we'll pass on questions for now, but if you need to talk to Victor, he's at booth 97, I think I just saw. So thanks, Victor.